Yo traders, what's good? So if you're new, welcome to the channel. If you've subbed up, welcome back. So I ain't gonna lie, the markets have been shit, all right? And when I say that, I mean US 30 and NASDAQ on the stock market open have been shit. Now, not every day, because some days we've been getting massive moves, like literally huge pushes, but they've been wicky, they've been really hesitant on the open. They've been a little bit shaky, right? This whole fucking month has felt a little bit off. And I ain't just trying to make excuses, yeah? I'm not the type to blame the news, the markets, whatever. That's why I came up with a smash and grab, because it's literally smashing through a support or resistance, grabbing liquidity, and leaving with the money. Easy, right? But there's been a lot of bullshit price action, right? DAX, don't even get me started on DAX. But this video ain't about ranting about how shit the markets have been, okay? So, what is this video about? Well, it's basically about, you know, to teach you breakout trading is a beast and a gem, and something that I believe is just a game changer, right? Like, you can trade ICT, SMC, whatever you want. People get breakout trading really confused, man. Like, you know, they think, oh, breakout traders just think they can push a button on a line and or a support and resistance when it breaks and just collect money. Yes, we do, because that's what we do and that's how we do it. But there's more to it, right? I didn't even try making that rhyme, but it's effortless. But no, listen, seriously. I done that £50 to £1,000 flip, all right? 2,000 leverage, whatever, it doesn't matter. It was fun, it was good. I was breakout trading. I wasn't smashing and grabbing though. And I wasn't trading the stock market open. I wasn't trading London open. I was trading trends. I was looking for price action. I was looking for structure, breaks, retests, all right? All of that shit. So I'm about to give you a fire strategy with using the 5-minute time frame and the 1-minute time frame, EMA, and simple breakout lines, okay? And the targets are going to be liquidity or previous structure. This might sound complicated, but believe me when I say it's going to be one of the easiest strategies you've ever seen, okay? It's nothing that I've come up with on my own. All of these concepts are real. They're used by traders every day. But I've just figured a way to put them together and use them the way I use them, all right? And they're pretty effective. So if you're having a rough time trading the stock market open, that 9:30 Eastern open, and you know, you're having a rough time trading breakouts, using that member effect style strategy and my strategy, then this video is possibly going to help you, all right? Because I am also a day trader. People get it confused. They think, you know, I'm just a smash and grab. I'm just a fucking Mamba style effect strategy trader. I am so versatile when it comes to trading, right? I can literally get in 7 in the morning, jump out 7 in the night. Don't care. I will hold a trade all day and trail a stop loss and collect the whole bag if I want to, right? That's how confident I am. I know I'm a good trader. So, you know, when I show you these easy concepts, all you need is a little bit of psychology behind it, a little bit of bravery, you know, be fearless, and yeah, you got it. So without rambling too much, let's jump onto the charts, break it down, and show you how I day trade in 2025, basically. All right, let's get it. So this is GBP USD, and it's currently 6:15 in the afternoon, all right? Evening, whatever, is the night time. So it's 6:15 in the UK. Now, this is not prime time to be trading, okay? But look at what I'm seeing, and this ain't me cherry picking shit. It's a forex pair, you know. And also another thing I need to add is you can trade any pair as long as it's trending, all right? As long as there's some sort of structure and it's looking good. So 5-minute time frame, 25 EMA is looking pretty good. Probably going to look better on a 50. And why would I say that? Actually, I'm going to keep it on a 25, all right? Why would I bounce between 25 and 50? Let me tell you real quick. Because I want to see, my bad, I want to see this EMA being tested. Now, what does it mean when an EMA is being tested? Well, just because it broke through and closed doesn't mean, you know, it failed. This is still a test, because the next candle is a big bearish one. So, you know, it's telling me, okay, we're still coming down. That was a test of the EMA. Comes back up, test it again, drops. All right, this EMA is being tested. Even this there, even this bit there is a test of an EMA, because it didn't officially tap it, but that's close enough for me, all right? So we're respecting the EMA. That's what I'm trying to say to you, okay? That's the first thing. Second thing, what am I looking for? Well, I'm going to be looking for support and resistance. So this is a nice support. As you can see, the move has already happened. Like if we bring it back to this point, there it was, okay? It gets a break, it retests, boom. So this is kind of what we're looking for. The move's already happened, but this is exactly what we're looking for. So we're looking for a trend. Check. And why would I put my trend line there? And why is it still valid? Because there's the first kind of touch. second, third breaks it, closes straight back inside, fourth. Now we only need 2 to make it valid. So it was valid already when we had these 2 tests there. And, you know, that's how I would look at it. So we had that swing, boom, there we go. So we're being tested. Banging stuff. We got a trend, all right? And let's just take it back to before it did this. Now we're looking for a break of this support level, okay? Same as above. We had the breaks of this support level too, and it did it right there. So, you know, right there too. Tested it again, dropped. So that's all we're doing. Every single time it breaks through the floor, is testing it again. You know, that old floor and roof saying, it did it again there. So can you see what I'm talking about? A trend, structure, respect, okay? But realistically, we want to catch on to it earlier. So, you know, let's take it back to a time when it did this. Cool. So if we come on the charts now and we've seen this, this is 135, okay? So New York time, whatever, GBP USD's popping. It breaks, it comes back. So at this point is where we want to be looking for our entry. Now, how am I going to enter? Well, I need a breakout, and on the 5-minute time frame, my breakout line would have to go there because this is the structure, right? This is literally the structure. I don't want it there. I need a sniper entry somewhere up there. So all I can do is go to the 1-minute time frame and look for a breakout there. Okay, there's the breakout right there on the candle bodies. Okay, let me change this line purple just so you don't get confused. There's the trend line. Right, now, you know, you can adjust this trend line if you want on the 1 minute just to make it make more sense. Why is my breakout line there? Because that is structure, okay? And if I could go down to the seconds, I'd show you, but I don't have that plan because I don't need it. So look, that's the structure right there. So I'm just looking for a break and a continuation down because I know overall we're bearish on the 5-minute time frame. So as soon as I see a break, I'm in. And let me tell you something. I'm getting in around about there, all right? My bad, that's the WAP. So I'm getting in there as soon as it breaks. Now it's hard to show you because it's bar replay, but as soon as this starts breaking through there, I am getting in. Now, there's the aggressive entry right there, okay? That's the aggressive one. And then that would be the more conservative one. None of them would be wrong. Now, I'm going to go with the aggressive one because I'm aggressive. Where would I put my stop loss? Well, there's the safest place because it's above structure, okay? But, you know, that's a nice sound. Someone obviously just subscribed. Julio Zaharia just joined the boot camp. Okay, you see? So, also go join the boot camp because the spaces are limited as fuck and they are filling up. But anyway, back to the strategy. So I like to get in, I'm aggressive, wherever, ratata, alright? As soon as we start breaking, I'm in. So I would have gone in around about this part of the candle. There's me in. I'm targeting the bottom, alright? We already know it gets smashed. But let's look at the bigger picture. Let's go to the 5-minute time frame. Cool. Awesome. Now we know there could be a retracement, right? Right now, we don't know about this. So we're going to think it could be a retracement up to there. And then boom. We got another opportunity to put another entry there. Or just hold the fucking thing and let it play. Do you know what I mean? And as far as you want to let it play, it's up to you. But that's how you get sniper entries and killer trades. I'm not going to lie. Like, that's the way to do it. So let's move on. Let's look for another one. That was just today. GBP USD. Let's go and look again. Okay, so we're going to go from London session Tuesday. All right, so this is London session. All right. So London session starts at 7, but I start trading at 8, an hour in, because that's when all the volume's there. But let's just say you're on the charts at 7 o'clock. All right. So you want to see the EMA being respected on the 5-minute firstly. Is this being respected? No. Why is this EMA not being respected? Look at this shit. Look at this. That is horrible. We want to start seeing some respect. So, okay, boom. We've broke. Really, really high, actually. But there we go. Okay, cool. Very, very wicky. Would I want to trade this? No. I do not want to trade this, okay? So, what do? We go away from the chart. We wait for it to sort itself out. You know, I'd want to see like a break above this bullshit and a carry on or whatever. But I don't want to be risking getting in around this area just because of all them wicks. That's way too many wicks, okay? So keep that in mind. Way too many wicks. Look how we rejected. All right, now we're above it. Okay, now we're back in business. There we go. So we got our break, our retest, all right? Now, do I get in anywhere? No, all right? The only way I could possibly get in is by going to the 1-minute time frame. There we go. Now I'd be looking for my breakout. Okay, boom. Put my breakout line there. Clearly I would be targeting, you know, the structure. places price has been pushed down from, all right? Okay, cool. Didn't work out. Trade genuinely didn't work out. What happens when a trade doesn't work out? You take the fucking loss, bro. All right, I'm a real trader. I'm not about to come on here and cherry pick shit to make it look good. Sometimes that happens, all right? Badass day. There we go. Let's let it run. So London session was not a good session. Now we're deep into New York session, okay? There's no respect. All right, is it going to respect this now? This would be fire if price respected this, because now we got structure, look. Boom, boom. Break. Now are we going to start respecting this EMA is the question, right? Okay. Nope, that's not no respect yet. Now we're back underneath it. Okay, now we can start looking. Okay, now we're back underneath it. Let's take a little look back to where it did close beneath it. All right, there we go. A little bit of respect coming back in the game. All right, let's put our breakout line there. So we could get in there. There would have been a sniper entry up there. Would we have been able to get that though, being real with ourselves? No, because I would have waited for this candle to come back down. So I wouldn't have been able to do that, okay? And why would I waited for this candle to come back down? Sorry, let me just stop going so fast. Well, because I was waiting for it to retest this EMA and bounce from it, but it broke above it. So now I needed to close back below it, and it did. So now it's closed back below it. Now I can look for my my breakout. Well, because this one's invalid because it's already broken, we move it down. This one's valid, okay? And it just broke. So what do? I get in. Always above structure is the safest place you can put your stop loss. Do you know what I mean? And target the previous structure. It's just how the story goes. Boom. There we go. So another nice clean trade. Just targeting previous structure, right? Now, I do have an indicator for that stuff. And if you wanted to, you could have used it. And I'm pretty sure. There we go. There's the indicator. Takes ages to smash it, but I'm sure it does. There we go. So yeah, we smashed it. I mean, I would have got in. I would have got out anyway, though, before waiting all that time. It looks a long time, but it's not. It's the 1 minute time frame. So from entry all the way to close, it was an hour and 43 minutes. That's a day trade. And the chunky lines there too are the 4 hour liquidity, because I've set it that way. So, you know, I'm guessing it's going to go take that 4 hour liquidity. There it is. Boom. 4 hour liquidity swept. Okay. So that's how you catch beastie trades anyway. And let's carry it on. Let's go back to the 5 minute time frame. And remember, I didn't cherry pick this shit neither. So it was a bad London session Tuesday, good New York session Tuesday. Let's go to Monday. No cherry picking. So Monday, we're looking for the London session start. All right, cool. I can already see what kind of day it was. So boom, London starts at 7 o'clock for me. Comes down. Are we going to respect this EMA? Are we going to respect this support and resistance stuff? You know, this structure. Because what we want it to do now is come down. Okay, we go to the 1 minute time frame and we look for our breakouts. Breakout there. All right, cool. Didn't respect it. Let's go back to the 5 minute time frame. Yeah, so we're just above it. Now we're closing back below it. So now we've broke above this EMA. This is how I'm teaching you how to use these EMAs. Broke above the 25 EMA. Well, you can check the 50 and see, okay, is it respecting the 50? Yeah, respecting the 50, testing the 50. So now let's go to the 1 minute and once again, look for our breakouts. Put a breakout line there. No break. There's the break. All right, cool. So you see what happened? Didn't break. Just tapped in. Not enough volume at all. Still waiting for a clean break. Boom. As soon as you see that candle bust through there like that, whether you let it close or not, that's up to you. Smartest place to put your stop loss would always be there or there, you know, at least. Then you want to be targeting the bottoms. But because that's not even a one-to-one, then I'd put the liquidity indicator on and I'd start targeting some liquidity, all right? So these chunky ones, remember, I've set as the 4 hour, and you just do that by changing the width. You know, change the width to whatever you want, put it to 10. And then the 1 hour I keep to 2 because it's easier that way. So I know these skinny ones are 1 hour liquidity levels, and this is the 4 hour, okay? And let's just see how it works out. Boom. Okay, so a lot of the time that happens with the indicator. It gets literally pips away from that liquidity level. I don't care if it doesn't get dashed out, yeah? That's a fucking winning trade, all right? In my eyes, anyway. Also, something I didn't point out to you is when price is like this and you've got a chance to put the stop loss above the EMA, then I'll put the stop loss above the EMA instead of putting it all the way up there. But that is the safest place to put it, really, okay? But for sniper entries, you can put it above that EMA, and then it makes the, you know, the risk to reward even more worth it. Now it probably comes all the way, yep, all the way back up. So you would have had to accept that it just tapped into that 4-hour liquidity. It did, all right? But look at it. Let's go back and look at the concepts again. A break and a retest. That's all it was. So boom, breaks, respects the EMA, also bounces from this fucking support zone and resistance zone, okay? I hope you're getting it now. So that's another successful day. Monday was successful again, all right? Look, it's still respecting the EMA. Let me get this indicator off so it don't look so sketchy. Right now we're like deep into the New York session. All right, cool. We want nothing to do with that, especially stuff like this. You want nothing to do with this, all right? You call it a day when you see price action like that. So let's test it on another pair. Let's test it on another pair. And I'm only using Forex pairs for these examples because indices, they don't tend to trend as good, okay? Right, look at this. Don't want to be anywhere near stuff like this, okay? Yeah, you don't want to be near it. You're looking for pairs that are genuinely trending on the 5-minute time frame. No trend there. This could be interesting, right? All right, so this is interesting. To you lot, this might not look like a clean trend. All right, so at this point, this is what we're expecting, right? This is what we're expecting at EMA looks like. It would have went like this. But it closes above it, okay? Messy. People think it's invalid now. No, it's not. Just wait for it to close back below it on a 5-minute time frame. Boom, closes. Now what do? Well, we're probably at some support and resistance. Yes. Okay, cool. There's plenty of TPs. No previous structure. All right, I think you get the picture anyway. So boom, go to the 1-minute time frame. Wait, let's take a look. Yeah, no, it would have to be there. 1-minute time frame. So I'm not liking, you know, that the break's already kind of happened. Next breakout line, I can put it there because, like it or not, this is structure even though it's messy. Put a breakout line there and boom. You see what happens? You get in, stop loss above the structure or above this EMA. Target your TPs, all right? There's your TP, smashed. Absolutely smashed. Done. Don't want anything else from it. Does it go below? No, it doesn't. So it just literally smashed this TP. Why did it start reacting from there? Because obviously this is an area where price got pushed up from. And yeah, you just get used to seeing shit like that, man. So I'm just using 5-minute for my trend, for my breaks and my retests, my EMA respect, and then 1 minute to enter. All right. So once again, there we go. And this is the same exact fucking trade, same exact trend. It breaks back above the EMA. What do I want it to do? I want it to close below the EMA. This is a 50 EMA, mind. You know, if it looks better on a 25, use 25, but it really doesn't. All right. 50 is the one that looked a little bit cleaner to me. Yeah. And again on my 1-minute time frame. So I'm just looking for a break on the 1 minute, okay? Right now I could change on the 1 minute to the 25. Why? Because it might look better, it might look cleaner. It does. It looks way cleaner on the 1 minute time frame. Because look at it. Look how it's been respecting it on the 1 minute. Beautiful. And now it's back above it, respecting it. So we know we're looking for a sell because on a 5-minute time frame, remember, we was using the 50 EMA. Don't let's confuse you too much. 50 EMA, it closed back below it. We know we're looking for sells to carry on down. Go to the 1 minute time frame. 25 looks cleaner. Boom. There's the break right there. As soon as it breaks, my bad. As soon as it breaks, we're in. Stop loss above there. Or, you know, let it break below the CMA. Now we can put the stop loss there. Target the bottom. Smashed. All right. Absolutely smashed. So I hope you're getting the picture. I don't know if it goes any further. There's the 4-hour liquidity down there. Usually likes to go to the 4-hour liquidity. It's like a magnet. All right, so in this case it didn't, I don't think. Just gonna pull it across and see. There it is. Boom. Awesome. Sweeped out that 4-hour liquidity. This is day trading. This is how I day trade. That's a 1 to 8 potentially, all right? Or if we was genuinely just waiting for the 4-hour liquidity levels to be swept, then it was a 1 to 7. Because there they were. Boom, big chunky ones. Bam. Smashed. All right, all from the concept of we was looking for a 5-minute continuation and we got in on the 1 minute sniper entries. That's how I day trade. That's how I do breakouts. Like, it doesn't get no more simple than that. So I hope this video is helping a little bit, all right? And this is USD CAD. So these are just random Forex pairs. I'll be honest with you. These are just random Forex pairs. Any pair that trades trends, you're going to be able to do it on. Let's look on gold. Let's just look on gold. Look, it's trending over there. All right, this isn't trending. All of this is fucking ugly. No one wants a part of that, okay? But we need to see clean structure. I'm not really seeing clean structure. Let's get the EMA out. All right, so what time was this? Tokyo session. So it goes to show, even the sessions, man, it doesn't matter. As soon as you see price respecting the EMA like this, look at it. Boom, respecting it. Back above it. Boom, respecting it again, all right? Tokyo session comes in, so we want to see some respect on the EMA. Remember what I said now too. Respecting the EMA doesn't mean, you know, it can't close below it. It means it has to close back above it, all right? So no close above. There's a close above, but pretty much we're still bearish. You've got to look at price action and say, you know, right now we're still bearish, okay? I mean, you could argue that this break above there and close was when it become bullish, but then it closed back below it, okay? So yeah, now we're waiting for the break above this structure and a continuation. Now we know we're bullish, all right? So we want our EMA to be closed above. There it is. So our EMA is closed above once again. What am I doing? Well, I'm looking for a continuation now. And my first little minor target would be there, all right? 1 minute time frame, all right? Boom. My bad, I don't know why it does that. There it is. Boom. All right, that wasn't as straightforward. It came all the way back to entry. Bullshit really, but it is what it is. Below the EMA, there was the target. Didn't get there. Oh, wait. It did get there. All right, cool. So it did get there. It was on you if you wanted to hold that. Probably get a 1 to 3 out of it, to be honest. Yeah, get a 1 to 3 out of that. And that was just the first TP. Now, if we go to the 5 minute time frame, the possibilities of this, doing some crazy shit like this, you know, is actually possible. It's not impossible. Like, look at it. In the end, it stopped us, but look at where it got to first. That's a 1 to 11. A 1 to 11 in 3 hours. So potentially a 1 to 11 in 3 hours if you just trail your stop loss behind it. Say this is the stop loss, this little red line, and you're just trailing it below structure, below structure, below structure, below structure. Do you know what I mean? Crazy possibilities just from entering on the 1 minute time frame using an EMA and a breakout line. It's absolutely nuts. People complicate trading way too much.